Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. Let me show you the calendar first. Well, it's not very busy, but you still need to know what is going to happen today before making any action on the market, before opening any position on the market. You need to know what is going to happen, what is planned in the calendar. Yesterday we had only important data for the British pound, so GDP, which came in line with expectations, but manufacturing production came worse than expectations. On many instruments, British pound had a nice occasion to gain traction. British pound had occasion for gains, but failed. And well, we do not have a negative situation on British pound, but I think that the positive movements are just extended in time. Today, maybe Mark Carney will help British pound, or maybe he'll make the situation worse. We will see. In 4 hours, we'll have a speech from Mark Carney. And in 8.5, almost 9 hours, we'll have speech from Jerome Powell, so chairman of Federal Reserve. That's it. So today is not very busy, but overnight. So if you want to open a position today and keep it for tomorrow, remember that we have crucial data for the for the New Zealand dollar. Keep that in mind. Rate decision statement, policy statement, press conference, it will strongly affect the New Zealand dollar. Fundamentally, market is rather quiet, not much is happening, so we can move to the technical analysis now, and we start with gold because the movements on gold are pretty interesting. So what we have on gold is gold trying to defend $1,307 per ounce support at all costs. Quick reminder for you guys that $1,307 is super important. It all started as a resistance in 2015, resistance in 2016, support, resistance, 2017 maybe not so much, but 18, first half strong support, then in the middle resistance, and now it's a support again. Gold is doing pretty good, and it is despite the fact that American dollar is super strong right now. There is a strong correlation between gold and dollar, so stronger dollar drags gold lower. But today dollar is stronger again, and yesterday it was stronger. But as you can see, yesterday upswing, today upswing. So gold is climbing higher despite the stronger USD, which can be perceived as a positive sign. Before this, you remember maybe from the daily analytical reports from the last week or from our trading sniper videos, we had a head and shoulder pattern, left shoulder, head and right shoulder. Here we estimated the minimum target of this formation, but the breakout below the neckline, which was here, was fake, and the price reversed. We had a second attempt to test the $1,307 and price bounced again. So we do have a double bottom formation here, double test of $1,307, which is pretty good. Also, in the same time, this is a part of the inverse head and shoulder formation, so a left shoulder, head and a right shoulder. If there is an inverse head and shoulder formation here, there is also a neckline. This purple line is a neckline. So we do have a combination of a neckline and the horizontal resistance marked with a blue color on $1,315 per ounce. And the thing is that the price closing H4 candle, because it's a H4 chart, above the blue line and above the purple line will be a proper buy signal. So price closing a day on the green checkpoint will be a strong signal to buy. On the other hand, price closing below the blue line, as you can see here, pretty important one, blue line, so yellow line too, will be a signal to sell. Euro dollar, this is pretty important. So 1, 2, 3, 4, 5, 6 bearish days in a row. This one from yesterday is the most important because it breaks the lower line of the symmetric triangle pattern. Symmetric triangle started here at the end of September. And during this we had a decreased volatility, but as you can see we got a breakout, and that gives us a sell signal. The last time we had 6 bearish days in a row was here, 1, 2, 3, 4, 5, 6. After this we had 2 days of a bullish correction. Today we had a chance for a bullish correction, as you can see here, but last hour brought us new lows, actually new yearly lows. We are on the lowest levels since November. This is pretty huge. Apart from the lower line of the symmetric triangle, we are breaking the 2 horizontal supports. First one is here, second one is here. Correction breakout. Well, euro dollar seems doomed and the long-term sentiment is definitely negative. What the buyers can think about is a double bottom formation and maybe a bullish correction here. But the thing is that long-term sentiment on euro dollar is definitely negative. After this breakout of the lower line of the symmetric triangle, it does not look good. Those were 2 instruments from the Trading Sniper video that we already posted on YouTube and Twitter and everywhere actually. And the third instrument mentioned on the Trading Sniper video was the American dollar to Japanese yen. Here on this chart I wanted to show you the beauty of the ascending triangle pattern, which was here. Ascending triangle is a formation with a horizontal resistance and a dynamic support, and the price broke the upper line of the ascending triangle. And we were expecting this. We made this checkpoint a few days ago and the price was still inside of this pattern, and we said that the price breaking this area and touching this checkpoint will bring us a buy signal. And look, and the buy signal is here, and as for now it gives us 40 pips. As for the potential target for this movement, we can see the upper line of the channel up formation, or the flag if you will. In the short term there can be a bearish correction, but in the long term this sentiment on American dollar to Japanese yen is positive. Now dollar index as you can see 1, 2, 3, 4, 5, 6, 7, 8, 9 days. 9 bullish days in a row. It all started with the false breakout here, and after this buy signal was strengthened by the breakout of the upper line of the wedge, and it is happening. We said that the potential target for this movement is the yellow area here, yellow horizontal resistance, and the price is actually going there. The price is aiming this resistance, and chances that we will get there are pretty high. Australian dollar to New Zealand dollar, what we are having here is still the price locked in a sideways trend with a false breakout. Here the price came back. After this we have a false breakout here. That is why I think that the breakout to the upside is more probable than the breakout to the downside. But for the proper buy signal I need to see the price closing above the yellow area. If we are still below, the movement to the downside is equally probable, equally possible and probable as the breakout to the downside, but price closing an H1 candle above the yellow area will be a strong signal to go long. Now euro to Swiss franc. What is happening on euro to Swiss franc is we are having downswing which stopped exactly on the midterm uptrend line here. So we had a double top formation, 1, 2, breakout of the horizontal resistance, double bottom formation, 1, 2, breakout of the midterm downtrend line, and the price was aiming, well, will be probably aiming higher, if not only the fact that the euro is super weak and the buyers couldn't hold the price above this horizontal support. So it would all look interesting, it would all look positive for the buyers, but the price is not doing this. The price is hesitating. So there is no proper signal here. Now euro to British pound. On euro, actually we wrote a piece about euro to British pound yesterday, where we were rather bearish, and our view was based on the fact that we had a downtrend, we had a wedge, which was a trend continuation pattern. The price broke the lower line of the wedge and went lower. Then we had another wedge. This was a much smaller wedge, and I was thinking about the downswing too. The price is still in that wedge. Yesterday we tried the breakout to the downside, the price reversed. Today we tried the breakout to the downside, the price reversed. But the selling pressure is still here. The selling pressure is still here, and I think that as long as we stay below those highs, the breakout should happen. I also in that piece wrote that okay, fair enough, there is a sell signal, there is a negative sentiment, but if you are not convinced yet, you can wait for the breakout of the blue area. And yes, this view remains intact. So if you're not convinced about the movements yet, you can wait for the breakout of the blue line. It will be head and shoulder formation, left shoulder, head and right shoulder. So the breakout of the blue line will give us a signal to go short with the potential target on the green area. And now Bitcoin. Bitcoin, we were wrong here, because I thought that this pennant should bring us a drop. But as you can see, at the end of the last week, we had a reversal. The price broke a few important resistance actually at once, because the price broke the blue horizontal resistance, or is breaking it right now, and the dynamic resistance here. So with this, my view of the price getting to $2,900 for one Bitcoin, because this is my view. Oh, I'm sorry. Yes, it's a blue area. Price getting to the blue area, this one. My view of price getting there is, let's say, put on hold. I still have to wait for this. With the current price movements, we have quite big chances for the test of $6,000 for one Bitcoin. We will see. But in general, the sell signal will be triggered again when the price will come back, let's say here. But as for now, no. New Zealand dollar to American dollar, here we do have a proper sell signal again. So we had the support for the whole 2017. After the breakout, it was a resistance and resistance. So we made this with the double top formation 1 and 2. Horizontal resistance, dynamic support 1, 2, 3, 4. After the breakout of the support, this support was later tested as a resistance here. And the thing is with New Zealand dollar to American dollar is that as long as we stay below the yellow area, the sentiment is rather negative. Buyers have last support here. Maybe let's change the color. Orange. Breakout of the orange line will give us a sell signal. Let's check crude. We wrote a piece about the crude yesterday, and crude made a false breakout, which is not really good, but it's good for the traders because false breakout is a strong trading signal. So if you are not hurt with your short position here, you are good. We are not hurt because I didn't open a position here, but it was looking pretty negative. Why? First of all, head and shoulder formation, left shoulder, head and right shoulder, breakout of the neckline, test as a neckline as a resistance, positive, all good. When we wrote our analysis, we are somewhere here, and I said that we have one support left, which was this one, and we broke this support. So that triggered a sell signal according to the technical analysis. But as you can see, the price reversed. And actually, not only the price reversed, okay, let's change the color here. Made a false breakout, reversed, and now broke this line. And what's this line? This is the upper line of the wedge pattern. Not only we broke it, but we tested that as a support and we went higher. But there is still no buy signal here, even despite this and this, the false breakout and this, because we are still below the horizontal resistance. Price closing a day above the blue line will be a signal to go long. So this is my view on the crude. As you can see, it changes, but I'm not biased on the crude. I'm not biased on oil. I am a price action trader, and if the price action is telling me that the price will go up, I'm bullish. When the price action will tell me that the price will go down, I'm bearish. So I'm not focusing on one side only. Both sides are open for me because as a trader, you can trade both sides. You can as easily buy as sell, and this is what the trading is all about. So let's hide all the instruments that we don't have. Let's keep the instruments that we have open, and let's analyze new instruments because it's first daily analytical report. And you know that I like to analyze instruments from the scratch at the very beginning of the week to show the decision-making process. What do we have here is Australian dollar to Canadian dollar. Nothing interesting. Resistance. Or maybe it is interesting. So we have a horizontal support. Horizontal resistance, horizontal support, support, resistance, and okay, the price being here is a signal to sell. Interesting. Let's leave this chart. Next one. Australian dollar to Swiss franc, middle of the sideways trend on D1. On Swiss franc. And at the beginning of this week, we had a flash crash on Swiss franc, which became weaker and then stronger again. But no trading setup on Australian dollar to Swiss franc. Australian dollar, Japanese yen. On a daily chart, it is a false breakout above this horizontal resistance. So it can be a good occasion to go short, because now we do have a correction. All right, it is interesting. So here, 38.2, what are the odds of this, that the price bounced from 38.2? I'm saying this because I am a fan of 38.2. Flag price breaking lower line of the flag in 23.6 will be a super strong sell signal. So let's keep this chart opened. Australian dollar to American dollar. Here, not much is happening here. Canadian dollar to Swiss franc. That is this resistance. But here, it is power of the false breakout. Yes, this false breakout here gave us a proper buy signal, and the buy signal is happening. Ooh, this was nice. Bounce, horizontal support, bounce, and an upswing. So Canadian dollar to Swiss franc is having a buy signal, and the potential target is here. Canadian dollar, Japanese yen. Unfortunately, after this flash crash, those instruments do not look good. Here you have Japanese yen to Swiss franc, so two flash crashes, 1 and 2. Okay, this can be interesting, because to be precise, this line has to be somewhere here. This is a false breakout, flash crash here, so you should not consider this. So this can be considered as a false breakout above the upper line of the symmetric triangle, and false breakout should result in a movement in the opposite direction, and it is happening right now. Boom. Potential target is on the lower line of the symmetric triangle, and the chances that we will get there are pretty significantly high. Euro to Australian dollar. Ooh. I like this formation here. I like the daily chart here. Doji, shooting star, and a drop. Head and shoulder formation here. Left shoulder, head and right shoulder. If here. Let me just change the color here. Yellow, yes. Yes and yes. So breakout of the orange line will give us a sell signal. This is the potential target for this movement. And I think that chances that we will get there are pretty high. The sell signal is happening as we speak. Definite breakout last hour. Now we do have a reversal, but it may be just the price willing to test the broken support as the closest resistance. As for the risk to reward ratio, sell stop loss 50 pips, take profit 120. It looks good from the risk to reward ratio. So guys, that was the last instrument that we're gonna mention today. Tomorrow we will analyze the rest of them. I hope you enjoyed that. I hope you enjoyed our daily analytical report. Thanks very much for attending. Now a short break, and after that the webinar about price action. I hope to see you all there. So thank you, good luck in trading, and visit our Twitter account and our website alpari.news for more information, for more trading setups, and good luck in trading.